Well, happy Monday. It's August 19th. Want to bring you the latest data here in the Austin metro area. Of course, we're going to start with interest rates, but we're also going to talk about the latest metrics from July to give us an idea of the trends in the market. And we're going to look at rental data from July as well. And finally, we'll wrap it up with inventory levels in the market to see how we're shaping up with the school year back in session this week. So let's look at interest rates. We're now hovering in the mid sixes. The good news is we're starting to see that stick. So it hasn't been super volatile and rocket back up to 7. We did come below 6.5 last week or the week before. But right now we're seeing kind of mid sixes hold steady. I'm going to show you a chart here at the bottom. So this is going back to July 1st. So in July, we were still in the 7s, but then we finally kind of broke below. And then here was the big drop. We got down to 6.3. We're sitting right now in the mid 6s. But you can see on this chart, rates are starting to come down. That is almost 2 months of activity. Ideally, I think the market is starting to bake in that the Federal Reserve may lower rates next month. They are meeting this week in Jackson Hole, Wyoming. It is not to make a decision on rates. It is mostly just for academic reasons, but they're going to be talking, and we'll see how the media reacts to that in terms of how they're projecting what the Fed's going to do next month. But we're already seeing rates come down. Our good primary home buyers are starting to lock in the low 6s and on occasion 5.9. So, but I would predict right now a good primary home buyer is probably in the low 6s on their mortgage rate. All right, this is going to be sales activity. And thanks to Bramlett Residential, they put these charts together. So this is looking at July last year in the left column and July this year in the right column. And then what is the change? So total sales, it's not that different from last year. We're down about 1.3%, but pendings were down in July almost 10%, a little over 9%. Listings, pretty even with last year. But active listings, this means the ones that are still sitting on the market waiting for an offer, up 22% from the year before. We really have just had supply continue to build over the last 2 years. We might be peaking out on that. I wouldn't be surprised if next year at this time we have less inventory, maybe going back to these numbers or below. But for now, this year, with those rates having stayed high, that kept inventory high. Withdrawals and expireds, one of the reasons when you have a lot of inventory that can't sell, you're going to have more people take their property off the market. And so we're seeing that rise 14% over last year. The average sold price is down 3%. The median sold price is down about 2.5%. Definitely a little more softening, but not huge. This is not a crash. This is just a continuation of soft demand, high supply. If that balance shifts a little bit, then I wouldn't be surprised if maybe by the end of the year, since rates are coming down a little bit, if we get a little more buyer demand maybe than we had last fall, then you might see that tighten back up to 0, for example, and we end the year where we ended last year. So that is a look at sold data. Of course, months of inventory is the last metric down here, obviously up about 34%. That's because you have more supply on the market. So here's another chart. This is the 5-county metro looking at the average and median sold price if you want it a little more as a visual. So this is last July, and here's the fall. Here's November, December. We always see a little bounce in December because you have a lot of people that want to buy before the end of the year in November, close in December. So that gives it a little spike. And then we restart the year, usually at the low, and that's where we see January. So the spring always has kind of the upswing in price. We peaked out this year in April, and we're seeing the prices. You can see this line is starting to soften off, and some of that could be the rates coming down too. But I think it's too early to see sold data, especially from July. These are June buyers who closed in July. The buyers right now writing offers in August are going to close in September, and we will see that data in October. So you're going to have to wait a few months before we see what buyers are doing right now, but I can tell you as best as I can. But what we're seeing is it's not that different. 593 down to 575 on the average, 463 down to 449.5. So, maybe 12 or 13 grand, but not too noticeable from last year. This is going to be new listings by month. And obviously this year we were way above last year on listings, but now we're catching back up. I think enough sellers tested the market or thought, hey, too many homes for sale, I'm not going to list. And you could see the number of sellers bringing properties to market is starting to drop off because we already have enough. And they're seeing that supply on the market. They're going to let that flush out. And then finally, this is a separate chart just to give you an idea of what's happening in the market. I thought it was interesting. So this is job postings for the last 4 years. So obviously, this is the pandemic, 2021, 2022, mid 2022, and then rates shot up and job postings came down. But again, they were steepest here, a little sharper last year, and now they're starting to flatten out a bit. I think it'll stay this way through this year, and then we'll see what happens next year. Let's go to rental statistics. So this is thanks to Treaty Oak. They're using kind of the same software to pull these charts together. So I hope you can see this. But anyways, this is rental data. This is single family rentals. Again, July 2023 in this column, July 2024 in that column, and the change. So for single family listings, we're up about 8% on the number of listings in the market, and we're seeing rents soften about 2%. So just like the sale market, the rent market is also seeing softening because of high supply. So we have demand. We just simply have a lot of supply in the market. Days on market is up about 16%. Duplexes is this bottom group, a little sharper on the softness. So listings are up about 22% over last year, and they're down 4 to 5% on the average and median sold price. So for a single family home, on average, we're seeing them rent 50 to $100 less than what they were renting for last year. On duplexes, maybe it's 100 to $200 less than what they were renting for last year. This chart says on average $100 and up here about $75 for single family. Why is there high supply in the rental market? Well, some of it is multiple factors, and I've talked about these before, but you not only have a massive wave of multifamily construction, as much multifamily as we've built in Austin in the last 40 or 50 years. So we've added another 10 to 15% in supply in large multifamily apartment complexes. We haven't done that in 40 to 50 years. So you're flooding the market with a lot of empty new rentals, and that has to work its way through that demand. So the tenants kind of have an upper hand for a moment. And then on the sales side, let's call it single family, which doesn't really compete with those apartments as much. What you're running into is all those sellers who couldn't sell their property. A lot of them, they still had to move. They left the market. They're going to turn that property into a rental. And again, they may or may not want to be landlords, but they need to get some money. And so they are pushing it into the rental market. And again, that's creating a surge in supply. So we're just in that market right now in Austin. We've been there since late 2022 with kind of higher supply, softer demand. Rates are really going to be the pivot, I think, to tell us if we're about to change into a new market. Finally, let's look at active versus sold listings. So this is the for sale market in our metro area. The green is active single family homes for sale, and the blue is sold data. So how many actual sales took place of single family homes. As of July, we sold 2,835 single family homes in July. That month, we had 13,533 active listings. And so again, maybe 20% of the properties are going to get a contract offer and close. That's 5 months of supply right there. And so we're seeing you can see it peak off. It's starting to come down. There aren't as many people listing at this time of year. And the sellers who aren't selling or don't, want to continue selling are either going to withdraw or expire their listings. So that's along with sales, that's also going to bring down some of that supply. What I'm curious about is it's a little early to tell, but with the rates having come down, is that going to create more buyer demand? Obviously, I think people are also coming back into town now because school starts this week for Austin ISD. Some of our suburban school districts started last week. So now everybody's got to get back into town, at least if they have children. And so what we're going to see is that takes a couple weeks. Everybody's got to get used to their school schedules. But once we get into September, typically, if we're going to get any kind of fall upswing, we will feel that probably by the first or second week in September. So we're not quite there, but I expect we're going to feel that pretty soon. I mean, knowing who's been calling us and what's been happening, we are feeling that uptick in buyer activity. It's not crazy, but we are feeling more buyers getting back into town, making offers. I've actually got some clients that had to bid on a property this weekend that had multiple offers. We're not going to see that a lot, but we might see that pick up a little bit as we get into the fall. If you are a seller right now, you do have a few pieces of good news, but I would be cautious. Obviously, we're seeing inventory come down a bit. That helps you. And we're seeing interest rates come down a bit, and that helps you. But what I would say is it's still way higher inventory than we've had the past 2 years. So it's still going to be more competitive and more of a challenge to secure that buyer without, we got to make sure that price is really good. The house looks really good. The property's in good shape. And we're doing what we can to incentivize buyers and their agents to come into that property. If you're a buyer right now, this could be a really nice little window before buyer demand comes back to the market. You've got tailwinds of lowering interest rates. You still have lots of properties to look at, although that's going to shrink a little bit every week. But yet you don't have that demand with you. So I would say if you can get something in the next, maybe quarter, 2-3 months, this might be a good window before we feel that uptick in the market from buyer activity. Anyways, I hope this information is helpful. If you want to check out our YouTube channel, you can go to @RyanKellyGroup on YouTube. You can see these videos each and every week. And of course, click that subscribe button to keep in touch with us. And of course, if you know somebody looking to buy, sell, or even invest in the Austin metro area, we'd love the opportunity to chat with them. Hey, my kids start school tomorrow. They are not looking forward to it. I am, but we're excited to get them back into the school year and get the swing of things going again. Anyways, hope you guys have a great week, and we'll talk to you next Monday. Thanks.